All right, lady and gents. Hope you guys had a good week. It's just coming into the close, or just market just closed. Good session today. I want to hit on a few things. As far as markets go, I'll do a recap just on what we did today. I've been really trying to help, and you guys have been giving me great feedback on how you like the intraday stuff, and I always knew that, and it's just a more matter of like having too much going on for me trading wise and trying to get the technology to be in sync with everything. But I found this new software that's been working out good and I like it. So I'll try to do more of that. But we had a good session today. It was a good week overall. Before I get into the trading recap, I'll do also global macro. I think there's a window for us to potentially have a risk off move. I mean, that's always kind of the potential in May, but I talked about it in the live room today. There's several reasons why we got to kind of have our antennas up as to, if we're going to see equities break down, maybe the dollar rally. And I'll get into just the pivot points and the real points of interest, the pivots that we need to keep an eye on in the next week. It's pretty clear. You just go with the model, but I think it's important here as we close out the week. But guys, also really exciting. It's Friday. It feels like spring here in Chicago finally, and I'm just in a good mood. But if any of you guys, I knocked 50% off the prop trading program. So if you go to jenkinscm.com, services, the prop programs right here. If you like what we've done, check out the last couple of videos, kind of what we're doing intraday. And the same stuff applies to longer term positioning. You can apply the same concepts to any market, really, any time frame. But this program's going to be $5,000 going forward. And then I did a 50% discount here for anybody that wants to sign up for May. As we start May, I mean, I'll work with you for a full quarter and really the entire year, but it's going to be normally $5,000. It's 2,500. I've been saying the last couple of days. And then I decided, just because, again, I'm in a great mood and we had a good week, that I'll do a 24-hour flash sale. Anybody that wants to get involved. I knocked another $1,000 off. That's good till 4 Eastern tomorrow, Saturday. So if you got tax money back, stimulus money, whatever, I'm trying to do the best I can to get you in the game, keep some capital for yourselves. Or if you want to do like Top Step, if you want to trade the bigger contracts, $300 a month, there you go. There's 3 months of trading. I just knocked off $1,000. So that's where you can sign up for that. I changed the prices today. And then, and this is exciting too. I've been working on this. If you guys go to Substack, software third-party firm that allows writers to just makes it easy to put out content. And I like this because I've always got so many plates in the air and spinning, keeping all the plates in the air, different stuff with the business, that this is great for me. It allows me to put out content easier. And I'm simplifying the retail side of the business because I've been telling you guys, there's a little bit more institutional stuff going on. So what I'm going to do is, if you go to substack.com, this is where to find that. I'll explain it in a second, but you can put me in here. I just set this up. So I'm putting the CycleEdge Letter on this site. And essentially what I'm going to do here is, before I had the CycleEdge membership, we had independent real-time alerts. We had this, we had an options room. We have, I got me over doing CryptoEdge. For independent traders, from now on, it's just going to be the CycleEdge, $20 a month. It's not $150 for real-time alerts every month. It's not $100 for CryptoEdge, or $200 for the quarter. And you guys that are already in the room, I'll adjust your pricing to this $20 a month. But it's just going to keep it simple for me, where anybody can join the list, CycleEdge, and it's a weekly letter for me, and I'll do basically like a weekly podcast. I'm starting a new podcast called the Piker Podcast. If you guys don't know what a piker is, you can look it up, but it's a term we use on the desk and in the industry for somebody that trades small size but thinks they're a big shot. So that's going to be the new podcast I'm starting. It's called the Piker Podcast. I'd like to do some bigger episodes where I interview different traders in the industry, whether it's crypto or if some of my prop guys here in Chicago that I'm friends with. It's going to be a process, but I'm also going to do some smaller, quicker podcasts, say like in the morning or in the afternoon. We're talking about the close or just some psychology of trading, or just some different things or stories about my career or things that I've witnessed or changes in the market. So under this platform, it's simple. You can read the weekly free report, weekly podcast, and then if you want to be the member, obviously a CycleEdge member, it's only $20 a month. And I'm gonna put together not daily reports for that, but intra week. So several updates per week, and then you'll have access to all the episodes, not just one episode a week. I'll do like those several audio podcasts as well during the week. So you have full access to all those episodes. And then on top of that, I'm going to include the chat room, the trading chat room. And most likely I'm going to move everybody off of Symphony because there's something like, I don't know, 20 million or is it 200 million people on Telegram now? 20, it's crazy numbers. And the whole point of this, what I'm trying to do is simplify, build the audience, build the list, make it easier for people to subscribe, more affordable, blah, 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 blah. So if it means we got to move off of Symphony and we get bigger numbers and more energy and more activity, that's fine. So anyway, I'll put out some more details on that, but that's pretty much going to be it, guys. And then in the room again, I'll have like a free room and then we'll have the paid room, which is, it's not going to be for $20 a month. I'm not signaling like I used to, where you literally got every freaking move like you do an institutional client across gold, dollar, euro, yen, what we're doing in treasuries, equities. It's just going to be basic, bigger swing moves. So if gold's hot, I'm active there. You're going to have the alerts on that. If we're doing stuff on Bitcoin, you'll have alerts on that. If there's something else interesting on the podcast, we're trading DOT or something like Link or whatever other crypto. So I'm all going to put that in one spot. All right. So to sign up for that, guys, just go here to substack.com, type in my name. You'll find it, CycleEdge Letter. I set up, I think, most of this correctly. It should be all good to go. Just put your email in. You can subscribe, and then it'll walk you through the free version, or you can upgrade. And then it's like you save $40 if you want to do a full year. All right, so that's new. I'm excited about that. Let's do intraday, and then I'll hit big picture. So it did like, I don't know, do like 2,200, 2,300 maybe. I didn't really want to trade that much today as there's so much going on. So we was thinking maybe try to be out of there within the first 30 minutes to an hour, even less than an hour. Not really. I think it was just about under an hour. S&P, played S&P on the short side. I'll show you why. S&P on the short side made a little bit. It was mostly a hedge. And then NASDAQ was kind of a slow morning. We were long into pi. Again, I'll show you why on the other charts. A little bit easier to see. But look, this is the theme that I've been trying to get across. I talked about in the last two videos. Be busier with the trend. 18 buy and sells versus 6 on S&P, and then I shorted the Dow and Russell, just one-offs, just quick scalps. So long, buy, sell, buy, sell, buy, sell, buy, sell. And then I did do a couple more trades after we got off of the live room, the prop team. And I didn't really stick with those either because I was on the phone, etc. But I'll show you my reasoning for that. If you guys want to see, like, this is the 1 minute trend. So pretty involved on almost every cycle. Didn't really have anything on for that final push, which is what it is. And then I worked into a couple of plays here. So the setup was, I mean, Pi has just been on fire for NASDAQ. I mean, are you kidding me? Like, we sold off this morning, rally all the way back, fail exactly at it last night, come all the way back down. Huge cycles, but just very timely cycles here. I mean, they nailed the high every time. This is a 15-minute chart. And this morning we rallied right up to it and just got drilled. I mean, I'm just amazed by it sometimes even. So this morning you come in, and after failing at Pi, you come down, we retested the low. So I told the guys this morning that there's a good chance we could rally on the open, versus yesterday was a good chance that if we start to break down, there's room to fall back to some of these intermediate term risk ranges. So even though the 5-minute and 15-minute trend were down, including 30-minute, see how the bands are all negative, right? 30-minute bands, 15-minute bands. Pi's in the southern hemisphere. It's over. Bluetooth sound. Anyway, I get distracted. So in the southern hemisphere, right? 15-minute chart. So even though this is all down, on the open, I really want to focus on the 1 minute. I keep telling you guys 1 minute, 1 minute, 5-minute. And so the 1 minute started up here. And so I even said to the group, I was like, there's a chance maybe we can go all the way back to Pi. But the first place you have to deal with is the TMS, which is right here. And then once you got through that, it opened up the door for Pi. It's like the perfect roadmap. So all I did was work the long side in here. Buying, 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 taking, buy, sell. Missed this move. I was done by then. And this would have been an opportunity to go a little bit contrarian short. But essentially what I ended up doing is watch this 15-minute. This 15-minute cycle was high here into Pi, and then cycled all the way back down. And then look what you have. What do you guys have here? This bullish wall gets retraced all the way down to here, 3/4, 618, most likely. If you want to draw it from here, let's see what that retracement is. So the first wall I drew, 78%. This one's a little bit further than the 618 right there. But same concept, right? So as the 15-minute comes down, you got to kind of be patient, especially on a Friday when it's like a slow drifting pullback. There's a spot though, a couple spots to get involved. So being long here, I got long on this bounce into there and this bounce into there. But you see when the cycle turns that, see, this is when the cycle turns, this is the tick chart, the 1 minute trend that takes over. So it doesn't mean you can't go long. You just have to realize that, okay, if I buy well here, I want to take some into that push. Or if I buy well here, take some into this push. Buy well here, take some into this push. And or you can short the other side. When you're taking profit, you could sell more S&P at the same time. Yeah, and then once the 15-minute change, this is good contrarian move. And then you see how the bands flip, and now you're back in a different cycle. So that was pretty decent. Pretty decent morning. Mostly, again, busy on the NASDAQ. Didn't really push it on a Friday. And then let's talk big picture. Look, corn. So we called out this. This did 100% on options already today. This morning in the room, I talked about corn looks good here on this real money candle. It finished up at 673. I think we can go back to 700 into next week. So I'll put out some calls there. I mean, like maybe $1,200 in buying power. It's up already 1,400 into the close. It's one simple trade. But commodities have been on fire, so trying to pay more attention to that space. But here's what's interesting to me: global macro. So start with the dollar. Wow, euro really came off. Dollar rallied. Okay, this is exactly what I was talking about today. All right, this is freaking exactly what I said. For weeks now, we've been on this 8 train. Okay, that's the underlying and intermediate term trend. And I said today, if we start to break the 8 and you take this low out with the daily cycle, there's a room for this to come back the other way. We've gone from 117 to almost 122. It's a 117, 122 range. There's plenty of room for us to come back to 119, maybe even come all the way back to 118, maybe even do a full pi cycle to 116. So that type of dollar strength more than likely is going to coincide with stocks having to break down. I mean, sometimes it's stocks that break down that cause a dollar rally. Sometimes it's dollar strength that can upset oil, upset the markets. People look around strong. I mean, equities like weak dollars. So if you start to have a strong dollar, that can affect equity prices. It's never one thing. But that matters into the close today for sure. Oil didn't really care too much about it. But we took some gains this morning, so that was good. So the level to watch there in equities is this pivot low from a couple weeks ago. Couldn't really make a new high. You guys know phase 1, phase 2, phase 3. If you fail to make a new high, it's always your first sign that maybe you're going to turn. If we take this low out, you're going to have a phase 3 lower low for the intermediate term. The long term, you don't. Long term, you'd have to break the bands here. Really, you'd have to take out all these lows. But this is the pivot. It's very clear. Take that out, then we have to revisit this entire zone where we did a lot of work. You failed up here, came down, we failed again, kind of did like a W. It's right in line with the band, so it's very clear. It's this low and then this area that matters. It's the same kind of thing on the S&P. S&P is a little bit more firm. We actually made a higher high, but same thing, pivot. And then you could even look at these highs. This 4,000 area will be key. Plus you got the bands a little bit lower. So that's setting up going into May, which is seasonality. Selling may go away, it does matter. And we've had a good run. Earnings are kind of behind us. The inflation, the easy comps, that's all in the rearview mirror now. So the market's going to look forward to Biden bullshit, taxes, all the regulation, the stimulus, the inflation, what yields are doing. So the market's I don't know. That's the thing. When you do so much so quick, like we've done with the pandemic and all the second and third round of stimulus, that from there it gets incrementally harder to make the market happy. So those are the pivots to watch in equities. I'll show you what we need to look at in the VIX. These are the same updates, guys, I'll be doing for the CycleEdge members. So for 20 bucks a month, it's pretty amazing to get this amount of detail and high level ideas and pivots and actionable items. If if we look at treasuries, I'm not convinced that we're going to go back to a new low, a new yield, new highs in yield. If we get a risk off move, I think everybody's pretty content and comfortable being short bonds. So we might actually get a flight to quality type of bid, and treasuries maybe rally. That's kind of the contrarian view that I kind of actually like. But that said, I haven't changed my positioning just because the downtrend is still in place. So I'm short 30s, long a couple 10s, going to continue to trade around both sides. If we get it back above the highs from last week, that would be bullish for price, bearish for yields. That would matter. I don't know. At this point, I mean, people think yields going up is bad for tech, but at the same time, if tech sells off, bond yields are going to fall like crazy if it's a big enough risk off move. So I don't listen to too much of that nonsense. People trying to make reasons for stuff. It's just a lot of positioning. It's mostly the inflation stuff that's causing yields to go down. Plus the Fed's anyway, blah 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 blah. So we're right in the middle of the two levels. It's the new lows that matter in treasuries, and it's this pivot high from last week or week and a half ago. And then lastly, the VIX. I talked about in the room today also that this I guess price structure, it's subtle, but you can, if you know what to look for, you can see it. So here's the last little risk off move we had, right? I wouldn't even say it's risk off. It's just like a little bit of a correction. And then the bands go bearish here, and we're back into lower high mode in the southern hemisphere, failing at pi, right? Just selling vol. That was the place to be. Selling vol, selling vol, selling vol. So we're still making lower highs in that context. But notice the lower lows, right? VIX back at 1514 with everything that's still going on with the economy is kind of crazy low. But notice how we got above the bands. We got above these highs first. Got above the bands, made new highs relative to all this, all right? And then what did you get? Instead of these lows, you start getting higher lows. These lows are higher than these lows. So that to me is different. And these highs is this different regime of highs versus, I mean, similar to right here. Like these highs were trying to move higher, but weren't quite sure yet. So we're kind of in a 15 to 20 range on the VIX. And if equities break this low and we get follow through, you're gonna get your move on the VIX 24, 26. You'll probably make a lower high relative to this high. All right. So we're gonna watch that 20 area, this area into next week. Okay, guys. I'm exhausted. Have a great weekend. It was a good week trading. Hope some of you did well. I know a lot of you made progress as far as kind of getting some of that higher frequency micro stuff down, especially around the open. And if you want to learn more about this, psychology of trading, you want to work on your psyche, your trading plan, your longer term positioning, portfolio stuff, how to day trade, swing trade, options trade, Forex, it's all in that trading package. It's pretty much everything that I've ever produced to, as far as training and education wise. Just go to jenkinscm.com. Again, go to the services tab and then this get access here. And this has got your 24-hour discount. Guys, that's a great deal. I've never done coaching for that price and all my courses. One course is worth it, is the options course is twice that amount. So you get the 4X, the options course, entire proprietary trading model. It's about 10 grand in value, guys. So grab that if you want to, if you're serious about going to the next level. I'll work with you. Excited to do it. And other than that, have a great weekend and talk to you guys probably Sunday.